Hello everyone, welcome to Tuesday the 3rd of February, your technical market update. Today is all about the Australian dollars RBA interest rate policy, and that will come out in a few hours' time, and I'll focus on that in a minute. However, let's have a quick breeze through the other charts. The Great British Pound versus the US was weak, and that was on the back of some fairly strong PMI data. It wasn't massively outperforming, but it was still a pretty good read. So this tells you that the market is still heavily into the US dollar, and the Great British Pound is really testing $1.50, and if broken significantly, we could see it continue on. I think that eventually will happen. Right now, we have a consolidation phase in the pair that just needs to be broken out of, and it's going to take some sort of fundamental data to do that, and quite possibly could be Thursday's Bank of England meeting. So we'll stay tuned on that. However, if we do get an interest rate cut from the RBA, I won't be surprised if we see some drifting lower of pairs against the US dollar in general as a result, and we could just see it move a little lower in the session. The euro actually gained a little bit of support. That's on the back of some data out of, well, not data, it's officials making comment about the Greece situation and how they're willing to renegotiate debt, and they're looking to move forward. It's a new government, so they're still promising the world. The market's in a consolidation phase really, and waiting to see the real outcome, and some shots to be fired across the bow from Germany, the ECB, and Greece in the negotiation phase. And when that heats up, I do expect the euro to be sold off just purely on the arguments going back and forth, and the negotiation phase. It's just quite turbulent. I mentioned last night in Twitter that we could have seen a topping effect on the US dollar CAD, and as you can see from Friday's close and then yesterday's close, it's an engulfing bear signal. It's quite a significant and strong move, and I do believe that we have seen a top, and it's not because US dollar's coming off. We haven't got a lot of data from the US recently, but last night's data was a little weaker than expected. It wasn't overly poor, but it was just a little bit weaker, and it's had quite a good rally, so there could be some profit taking in the short term, nothing major. So the move was purely on the back of, in my opinion, oil. I'll just bring up oil quickly for you. The oil chart, as you can see in the daily here, it's bounced 2 days in a row, had quite significant gains, now testing a little resistance level that we've seen earlier, and this is a bottoming pattern that isn't confirmed yet, so I'm not going to call it a bottom. However, if we do see a break of here, and we could see some further gains. It's the oil producers, even the cheapest around the world, will not be making money below $40. So it's not surprising to see a bounce. The market will not have every single oil producer in the world losing money. They'll just dry up the market just to purely push the prices up. So it's not surprising to see a bounce, and we could see some further support. So oil is the driver there. In the US dollar versus the JAP is still in the same range-bound pattern that it has been for a long time, and I mention it every day, and we keep monitoring it. We're stalking a trade here, and we're stalking a breakout. The breakout's definitely going to come from the non-farm payrolls on Friday, but let's see if there's anything that can happen between now and then to help initiate that. So let's get back to the Australian dollar. First of all, the New Zealand dollar, we've had a bounce the last few days, and that's just purely on the back of the market questioning what's going to happen with the RBA. It's driven by the RBA. It's at the whims of the RBA now, and if we do see a cut, you will see further downside from the New Zealand dollar, because they're put into the same basket and they're treated basically like the same economy by the world, and it will get pulled down heavily. If we do get a cut, you could see a break of the short of the low, and I do expect you to if we do get a rate cut, and that's a trade that you could take and pick up some money. Regarding the Australian dollar, like I said, it's a very similar chart and the exact same outcome. Now, I mentioned in the fundamental video that if we get a cut, I do expect the lows to be broken, and I do expect to see us into the 76 region, and I expect the momentum to carry on throughout the week, that the Australian dollar will be under pressure. However, if we don't get a rate cut, then we could see an initial bounce in the Australian dollar, and that's just initial market reaction. What happens after that is purely based on the statement, and this statement could potentially say that we are looking to cut in March. And if that's the case, the rally could be short-lived and we could see all those people trying to jump in to grab a fairly significant run, get whipsawed out of the market, and we could have a little bit of a pullback. Either way, the data isn't good out of Australia. I don't expect the statement to be any good. Therefore, positioning ourselves to make money from a short Australian dollar is probably the most probable trade right now. If I was to trade it long and the market was to surprise with no interest rate cut, it would just be a short-term scalp long. I'm not prepared to do a long-term trade on this. I'm not going to fight the trend or momentum. So that's the way I'm looking at playing it. Waiting, if the data is a cut, it's just an instant click of the mouse and a sell, and selling for the long term. I'll be holding it probably for a couple of days, but then I'll also be adding positions and scalping on the way as well to compound the returns. If we have a look at some other pairs, I mentioned last night on Twitter that I'm short the Australian dollar versus the CAD, and that's double top pattern and the strength of oil story got me in up here, and the stop loss was above the double top. I'm now looking to move my stop loss to my break-even point, take half my profits, and I'm going to let the remaining half run. I do believe we're going to see some downside from the Australian dollar, so that's why I'm not taking all my profit. I will then be adding to my position short should we get an interest rate cut, and then the market should continue to sell and at least down to into the very low 97 cent area. However, I do believe it's going to continue on further, so that's why I'm calling it a big trade idea, and I'll be following that. And I'll also post some more updates on that on Twitter. The Australian dollar JAP, it's obviously in a downtrend. We've seen resistance here at 92 cents, and basically the low should get broken if we do get an interest rate cut and continue on selling. So that's a trade that you can take as well if we do get a cut. We can also trade the euro versus the Australian dollar. Here's the high, here's the low. If we don't get a cut, we could see it poke its head out through here. Don't get caught up in shorting it because, like I said, it could just get whipsawed and the market could continue on. However, if we do get a cut, I'm actually looking, instead of waiting for it to break out of these highs, if we do get a cut, I'll be taking a trade at $1.47 and basically taking the money up through here and continuing on. Very similar with the Great British Pound, Australian dollar. If I go to the hourly chart, we've got support here, and if we don't get a cut, it will poke its head down through here. But like I said, I'm not long Australian dollar, so I don't expect that to continue. I do see that this level here, if we do get a cut, will be broken. And so a breakout of $1.93 should continue on, and the trend should continue. So keep an eye on those charts there, the Australian dollar versus the Aussie, the euro versus the Aussie, the Australian dollar versus the JAP, and the Australian dollar versus the CAD, and also the New Zealand versus the US, and the Australian versus the US. There's a few options there, and usually the pairs that one is got to be strong and other one's got to be weak, they will get the most price action. So you can pick and choose if you don't want to spread your trades across, and obviously work out your equity management rules. So there's a few trading ideas. Keep them in mind, follow the charts, follow me on Twitter. If we do get an interest rate cut, I will be short selling the Australian dollar and probably won't have time to post it as I put my trades on. However, I will be doing commentary on the statement and letting you know that if we don't get a cut, whether the market is going to continue to buy the Australian dollar or whether we could see a whipsaw. I hope that's given you some insight to what we expect, and hopefully it's helped you out with your trading. Until tomorrow, trade well.